Hello to all traders and welcome back to the final market insights video of the week. This video has been once again brought to you by Orbex. So we're looking at the Bank of England's interest rate hike once again, the ninth time in a row. And it's a little bit of a concern because even though the numbers of inflation have gone down slightly, they've cooled a little bit. It's still at 10.7%, which is still quite a big high if you think about over the last 40 years where inflation and interest rates have been. So is this a cause for concern as we head into the new year, or are we looking at the light at the end of the tunnel, a little bit like where the Fed and the European Central Bank have been in the last few months as well? Well, it has actually risen, the Bank of England has risen the rates to a 14-year high. So this just shows you how fast they are trying to progressively stop the rate of inflation dampening spirits, especially over the holiday season, which is coming up. But not only that, as we head into 2023 as well, we are looking to see where the next move is for not only the Bank of England, but the European Central Bank and the Fed and other central banks around the world as they try to tame inflation quite significantly. So the Bank of England raised from 3% to 3.5%. So it wasn't really a surprise. 50 basis points was priced in, but cable did drop over 200 pips yesterday alone, as well as all the other pound pairs. So is this going to be just a little dip in the ocean, or are we going to see a full recovery and well, cable still progressively moving to the upside, as well as euro dollar as well? Need to mention that because we have seen this move of parity in the last few weeks, and it looks like it doesn't really it doesn't really look like it's going to test that particular region anytime soon. So with it being at the 105, 106 region and cable at the moment, as you can see on the chart, the 122 area, will we now see more of a slowdown in progression of hikes from the central banks? Well, as you can see here, since we saw this dip to the downside, we are now seeing this steady bullish channel, and it has been quite interesting to watch in the last few trading sessions, because if you remember back to Brexit, when the pound did collapse, we saw the pound the year after being one of the best recovering instruments in the market, and it actually recovered all the way back to where it was before Brexit. Now we're seeing this happen again. Really, we're seeing almost parity being hit not so long ago, but now really starting this V-shaped recovery. It's been quite a long time for this V-shaped recovery, but as you can see here, we are now climbing towards the mid 130 handle, and at the 122 level at the moment, it is looking quite slightly progressive, because I just want to show you, even though we took this 200 pip hit yesterday, as you can see here, today started off with a green bullish candle, and this has given me the indication that prices will again now start moving higher. With the 4-hour chart, with the assistance of the Ichimoku cloud, as you can see here, we are firmly engulfed in this cloud, but it is looking like we will start breaking through and continue the momentum to the upside, and then past this double top here, roughly about the mid 124 range. So you have to think that it's just a slight dip for a fundamental news event that will slightly hamper cable, but in the long run we are expecting another move higher, and possibly before the end of the year start getting into the 130 region. We'll have to wait to see if that does come into light, but it is looking quite a good story there. Quick look on euro dollar as well before we head out to the weekend. As you can see, it's going in tandem really with the with cable and a lot of the other dollar pairs. We've seen this bottom, this low, but since then, vast bullish channel, and it doesn't really look like it's slowing down anytime soon. We had a little bit of a dip yesterday, as I said, European Central Bank news as well, but now we are looking like it's going to just keep on moving higher, and as I said, it's got more of a recovery because the euro dollar has been in a collapsing mood for most of the year until this particular date, just at the end of September, before we saw a turnaround. How vast can this turnaround be? We'll have to wait and see, but it is looking very ominous now that we will have another leg higher, and going into the new year it will probably be a little bit of a weaker dollar against a basket of its main competitors. Just look at the intraday then, 4-hour chart like we usually do. We, as I said, firmly in this bullish channel, and it doesn't look like it's going to slow down anytime soon. We are now seeing what are the remnants of this kind of choppy action, but as I said, still in this bullish tandem, and the next psychological level for me is the 110 handle. We are trading just below the 107, so not really too much to go, 300 pips approximately until we reach that level, and we could probably do that before the end of the year. It's not really out of the question. So just be aware for the choppy markets over the holiday season. Lots of bank holidays coming up, lots of public holidays coming up. So this could actually slow the trading sector down and obviously bring gaps and low volatility into the market as well. So just be aware of that, and we'll see what happens towards the new year. So until then, have a great weekend, and we'll speak again next time. Bye for now.